Hello friends, welcome back for Bitcoin Technical Analysis, and the results are in. So in yesterday's video I started off and I was walking around outside, and then I spent like a minute at the start or 2 minutes, I don't know, saying thanks to people for commenting and replying to the comments live on the recording. And well, yeah, everybody hates that. I've lost subscribers since yesterday. I'll not be doing that again in a hurry. Just wanted to be a bit more personal and stuff like that. Whatever, let's get on with the Bitcoin technical analysis. And you might be wondering why, if I want to go on with Bitcoin technical analysis, I'm starting off with the SPY up here behind me. As you can see, the current price here, 237. Oh my goodness, that's up 6.68% on the day. And you know what, actually, compared to where we were just over here below down to where we've come up to, we're actually closer to like sort of 10% really, if you're looking at where the prices got down as low as in the previous trading session. So on that basis, what does that really mean? Well, we kind of know that the American government right now has decided to just well, I was going to say start printing out tons of money, but basically to continue and ramp up its efforts to print out money at a never-ending rate. So yeah, it keeps on making the money and like literally making money and not earning it and then sticking it into the economy, and that's having a positive effect, I suppose, overall. So I thought I'd really kind of point that out and say there's a little bit of caution there, in the sense that this jump around that we've seen across. So we had the SPY up before. Here's the Dow Jones, and of course there's the same sort of thing here. You know, where you're looking at like over 10%. Change in prices, and you've got to think to yourself, really, and are we just sort of seeing a temporary lift up here, or indeed will this be the start of like what we saw over here, where we had that bottom? And of course it was actually similar enough in that we had quantitative easing and measurements and everything else coming in here at this time. Pardon me. Couple of little sort of warning type things are, though, that when you see this sort of a candle here, like this green one happen here, where the prices went up 5% in that one candle, and it engulfed not only the previous day but like the day before sort of body as well, and all that, and you're looking at this tweezer bottom type thing here. That's very much not really what we've got yet here. We've just got a huge gap and then a small movement in the prices themselves. Like the gap was obviously significant, but we've got this 1.7%, 1.6, whatever, that we're actually up on the day from where the trading actually started, as opposed to having traded its way up here. So just bear in mind, slight little bit of caution here, but we're talking about unprecedented times. So until the times become precedented again, then you can't use precedent to analyze them. Right, great. Done. Okay, there's another waste of time. How much is that? That's probably 3 minutes wasted at the start of that video, and I'll probably lose more subscribers off the back of that today. I wonder. Well, what are you going to do? Needed to be said. What we're looking at right now is that the prices are above the 382 here, which is this green line where you can see, as we know, 6,450 or so in that area there. That's what we're keeping our eye out for in terms of having opening closes of 24-hour candles above that price. And things could be starting to look a bit more sort of bullish overall, and we can look at this bump and run pattern as maybe starting to have some sort of positive effect. Now, the 24-hour candles, you can see we've had a decrease in volume really here, and as well compared to when we came up towards this resistance line, this downward trend line, as well, we've not had that increase in volume yet. And we know from Bill Kowski's book that we're supposed to be seeing that as part of the run phase, and we've not seen that yet. So kind of interesting. Oh yeah, the current price, $6,606 there right now. But that $6,606 seems kind of, although I would have said, if you'd asked me yesterday, I said, oh, that's quite high. It seems fairly low in the sense that we have seen the prices up there towards that, going up towards that 6,898 price range today, and that was our other profit-taking line that we had in there as well, of course, and around those two green lines of where we got this 886 Fibonacci retracement, and what's the other one that's in there? this green one over here, yeah, the 618 from a different area. So we knew that, we'd already identified that as being a potential profit taking line. And if you're doing that, if you're trading this whole thing and using these lines as profit taking lines and risk management lines and all the rest of it, then great, you're doing the right thing and you're trading well. You're thinking about your risk and everything else, and you're managing your risk appropriately, and you're not being greedy, and everything else. So that's fantastic trading if that's what you're doing. Wonderful. And who cares about what the gains are? Nevertheless, between these two areas, you're looking at a 6.5% sort of gain there. So like if you were doing that, then fantastic, well done to you, and you're making money hand over fist really in that sense. So that's great. On the other hand, if you're just sort of taking wild punts in around this area, and you're not at the same time as opening up your trade thinking about where you would actually like to close it at and what sort of, what really you're looking to get out of it, and you're not really thinking about things fully through, then perhaps what you're doing is actually gambling. And on that basis, there's a really good video out just now, just been released today by TradeSpot, and I'm going to link to it at the end of this one, and I highly recommend watching it, because even if you are an experienced trader, you'll have no doubt had this conversation with people who said to you, "Oh, isn't that just gambling?" And you'll maybe try to sort of articulate what's going on here, and in that video, everything is articulated for you. So I just think it makes thinking about things a hell of a lot easier. Where are we right now? Right now, we're seeing the candle. The price must have just gone under 6,000 there, or 6,600. Yeah, 6,530. So almost dropped $100 there as I was chatting about gambling. Just goes to show you, got to watch out for that. And we've got this candle, which is kind of like thinking about being a doji candle, but then also then reverting back up. Let's see where this candle actually ends for the day. It'll be interesting to see. But in terms of these oscillators and whatnot down below, there's nothing really there. I mean, we've got an upward trend, I suppose you could say, with this low, this low, this low, this high, and this high currently going in. And you could kind of look towards it and say, well, where could we have, if this was to become some sort of high, then where could you have your next low? And the next low could go anywhere back down towards where this downward sloping trend line is, for instance. So like that could happen if we were to be just doing sort of typical highs and lows. We've not actually seen the trend exactly turn around quite yet on the DMI down below, so sort of cautionary there, but the stochastics are trending to the upside and the RSI is trending to the upside, and there doesn't seem to be any sort of bearish divergence on the go there. Now, of course, I wouldn't have necessarily expected to see any. It's been quite short-lived so far. So over here on the 12-hour, are we seeing any then instead, where you kind of you're doubling your data points by just going down by half there, and looking at the bottoms here, there's no hidden bullish, and looking at the tops, is there bearish divergence? Well, if this here becomes a top here, then the stochastic would have bearish divergence on it. The DMI is turned around here at long last, so like you could start saying there's positivity. Of course, you need to see these things actually extend up the way, cross over the white line, all this sort of stuff. It isn't as sort of a solid across. I was going to say there, but it isn't as sort of as solid a signal as you had then, as what you've got now with the ADX positionally. But it's turned around, and that's interesting. But let's look down at the 4-hour, which is often our go-to for sort of shorter term divergence type thing. So we've got a high here, and you've got a higher high here. Isn't that fantastic? So let's look between these two things and see if we've got anything on the go just now. Bing bong, yes you do. That's called bearish divergence. Bing bong, yes you do. That's called, say it with me, bearish divergence. So you have that across those two there, and as well on the MACD, there's bearish divergence between these last two highs here on this time frame. Interesting. We could see some sort of play out from that and get a sort of higher low set in, for instance. That not going to become. We're not going to talk about this particularly bearishly, but say imagine it came down to the 50 simple, perhaps 5.8 there. You've got other areas as well, like the sort of 6,000, between 6,000 itself as a round number, obviously 6,165 where that 55 EMA is, and the 21 EMA there, 6,261, are all decent targets towards the downside. And of course you've got this horizontal line here, which could potentially offer us up support in around that 6,400 level, and 6,458 is where the 382 itself is. So there's things on the way there which could operate as support, but I wouldn't be very enthusiastic about saying this is a higher low low should the prices only go down as far as the 6,450 level. Actually, if the prices only went as far as that, then I would start to say that this isn't actually the higher high quite yet, because it could easily just be part of the overall upward move, at which point you'd be saying that this bearish, so-called bearish divergence on the 4-hour chart is actually false. Looking over here, you can see this sort of thing here is much more positive in terms of the trend, but this white line has only just got to 20. Now what we want to see here in the DMI is for the white line to be above 20. Now I've talked about that oscillator, that particular thing too much recently, I feel like, and I might remove it from my charts because I don't want to become Mr. DMI over here. But then again, you know, whatever. I don't think these things define us. What have we got on the go? So what else do we have to look at? Well, there's a couple other things, like did we get a gap on the CMEs? Well, obviously not. That we're still inside this box here that I've drawn on, which is our rangy box at the minute. I expect the prices to be operating around. In fact, funnily enough, you know, the low side here is 236, and that's down at 5,700, and the upside here has actually got nothing really operating in and around the upside, other than the fact that that's where the prices got up as high as before. So this box, while I say expect the prices to be operating around here, that's a little bit rich. I shouldn't really say that, but I kind of do feel like that for some reason. From a technical basis, it's not really true. But you know, over here we've got a higher high just here on this one. Let's check for that. Yeah, the same picture here in terms of divergences. Could this trend here be looking to sort of turn around? You know, could that happen? You can imagine things quite easily on that. Imagining is not what we're all about here, though. Yeah, so we're just going sideways at the minute in this area, and that's kind of funny when you look at when you think about the prices in general being up so high compared to where they were just so recently. Let's take a look at the Bitfinex chart, because Bitfinex was Mr. Positive. Let's go to the 24-hour just to sort of cut out some noise and take a look and see where we're operating in around this areas. I obviously remember we were bullish. Some people were bullish when the prices were operating here, and then we became bullish immediately afterwards, I suppose, on the channel, you could say. But in and around this area, let's see, is there anything sort of jumping at us? Not necessarily. What about the divergences that we see on the other charts down here? Yeah, that's still the case here as well between these two tops. So yeah, you know, there we go. Between this low and this low, then of course there's no hidden bullish divergence to be written home about either, which is something I suppose is worth looking out for. Let's look somewhere else, see if there's any other data jumping at us. Oh yeah, the GBTC, this is something that we're kind of interested in. Here's a little gap here, funnily enough. Wonder if we'll see that get filled. 4-hour gaps, I don't give a shit about 4-hour gaps, if I'm particularly honest with you. Got too much going on in life to be looking at all that minutia like 4-hour gaps or whatever. Now let's see, there is a gap on the 24-hour though, so that makes it more significant. So you've got a gap here, so let's stick another horizontal line in here and see if this one gets filled next. So let's have this one in here. So we've got a gap. Maybe I should need to color code these or something to make them more visible. I don't know. This area here is a gap, and this area here is a gap as well. This gap here is kind of the more interesting one, because this lower down gap is obviously the GBTC would be going down below the 236, but on all the other charts it would be a revisiting of the 236. So you know, the Bitcoin chart, for instance, on the spot Bitstamp chart, sorry, would be just coming down really as far as testing this here. You can see the 236 at 5,440. So if GBTC wanted to come down here and fill in this gap, it could do it with a nice wick even and have a test off the other one, of the 236 and other chart. Still kind of interested about that, which is funny because I did say that we turned bullish. But this is here, this is reality. The other thing I was kind of talking about as well was that if we did fill this gap in, you know, you got to think about the context of how that would happen. Should the prices go on up to, say, the 50% retrace level in around that 9 there, where you could see the prices operating at 8,500, 9,000, whatever, and then they came down in order to fill this gap, then you're talking about a couple of funny little dynamics, for instance. So if the prices came up here to around about this 8,500, 9,000 area, and then had to come down and fill a gap over here. You're talking about having another full-on crash having happened. You know, if the prices came up to there and then dropped down to here to try and fill that gap, you're talking about a 40% drop in price action. You know, and these are the sort of things. How much can we take this domestic abuse before we all go a bit mad? And that, you know, another massive crash there. So would you want that to happen in that way? Well, no, it'd be quite worrisome for the market if that were to happen. Various different things would have happened. For instance, these crab and Gartley patterns I have on here, the targets for them was like over here, the X, the B, and the C, and stuff like that. Say you did go up there, then you could have completely satisfied as much as you could have wanted to in a fairly bullish regard from these patterns, and then see the prices crash down, and you could then, instead of you thinking that this is just looking for its second confirmation, going to get a bottoming pattern, and we'll have a double bottom, and then we'll go up and we'll go all the way to 14,000. You can forget about 14,000 in the short term, and instead you'll be looking down and thinking, wow, maybe this pattern is going to fail, and if it does, it could fail hard, and you'd be looking down at 2K and stuff like that. So you don't want to see that happen, but at the same time, GBTC is a much less reliable thing, and these magic bullet things, that's not how you trade anyway. Got to just look at the conditions on the ground. Talking about the GBTC conditions and that, you have the on the daily time frame, you have the DM plus the positive blue line crossing over the white line just here and coming up towards the red line. If these if this blue crosses over the red line with the white line maybe turning around and going towards the upside, and because the white line indicates the strength of the trend essentially, then and the blue line being positive, being above it, would be like, you know, it's as if to say positive strength of trend, and crossing over the red, then, you know, those would be the conditions that you'd be looking at. And, you know, in terms of whether or not these things get filled, just getting a bit, there's a little bit of dyslexia on my brain there for a split second as I was looking at BTC GBP and reading that as GBTC and thinking, oh, I'm on the wrong chart. It's funny that. I think dyslexia is a spectrum. Anyhow, yeah, so if we were to see that happen, then that would obviously be awful, for it to be a sort of big crash coming down from one of these areas down to here, and you know, so we don't really want to see that happening. But, you know, if we're going to become a safe haven asset and all the rest of it, then maybe you want to have things like these elements of doubt be removed from your chart. But then again, it's a GBTC, and GBTCs are crap. This gap here got filled, but it took a year to happen. And I'm tempted to kind of say, ah, yes, but in a year time from now, the halving will have happened, and maybe you won't be able to visit that again, blah 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 blah. But you have to also face facts and think that maybe this could get filled in around 5,500, 6,000 or so, and that could be an ultimate bottom after a halving. And when you think about the last ultimate bottom for these things, for GBTC for instance, is down there at 3.6 over on spot prices, down there 3,133. You know, if the next ultimate bottom in the market came around 6,000, 5,500 or whatever, you're looking at almost twice the price of the last bottom anyway. So that kind of adds up with the happening. So I'm not going to say that's definitely going to happen, but I am kind of like being cautionary on that front. And how does that influence my trading? It doesn't, right? It doesn't really. I talk about these things so that we're all aware of them. But what I spend the majority of most episodes talking about are these profit-taking lines, you know, and risk management lines. And I ain't trading this from here to go down to try and fill some GBTC gap. I'm not mad, and that's not what I'm recommending any of you do either. Overall, I'm slightly bullish on this. You know, we're above the 382. I would like to see us try for the 50%, for the 50% retrace. I'm looking to see if we can get above the 21 EMA, open and close above 6,750. And of course 6,900. We're looking towards the 7,000s. We can try that 7,200, 7,250, 7,300 area, and then, you know, you'd be looking at having had a few more days. We could see then if there's any actual divergence showing up on the daily chart. Start calling it a trend. Start talking about crap like parallel channels or whatever you might want to talk about, and you know, or whatever, instead of calling this a sort of potential bear flag, which it still potentially is, by the way. you know, it still potentially is, although it's a little bit long for that. So yeah, right, okay, much love. Spent too long talking on this episode than I wanted to spend, but there we are, there you have it. Hope this has found been helpful for you, and yeah, thanks very much for commenting and subscribing. If you watch this episode, you know how much I appreciate it, but I'm not gonna do it at the cost of you guys actually enjoying the episode, talk about it too much. So there you go. See you in the next episode. Oh, 6,528. Well, boy, oh boy, the you know, well, that's not that's down from when we started the episode. Let's see how we handle this line at 6,450. Let's see if we can, if that breaks or whatever, then maybe just without being particularly bearish about things, you can maybe just look to the bottom of this channel that I've drawn it in there and say that maybe your target is 5,777 or something like that. Go for all the sevens. I don't know. It'd be good crack if it did that though, with that being the last 10 seconds of the video, because that's always like Easter eggs for folk. See you later.